Hey everyone, and welcome back to the Wealth Hub IQ. Today, we're going to be diving into the world of credit scores, a topic that can seem daunting but is crucial for your financial health. By the end of this video, I can guarantee you will have all the tips and tricks you need to improve your credit rating and master your credit score. So let's get straight in. First things first, let's talk about what a credit score actually is. Your credit score is a 3-digit number that lenders use to determine your credit worthiness. In simple terms, it's a numerical representation of how reliable you are at repaying borrowed money. So think about it like this. If a bank is trying to assess you as an individual, how likely are you going to repay that bank back the loan, then they have to use a specific criteria. That criteria that they use to assess your eligibility is what we refer to as a credit score. Credit scores typically range depending on the country that you're currently located in. So I strongly advise you to search the specific country's credit scores, the maximum and the minimum, so that you have a good indication. However, the UK have a credit score of 300 to 850, with higher scores indicating better credit. In the UK, for example, a score of 700 and above is generally considered good by a lender, while 800 and above is normally considered excellent. Your credit score is calculated based on 5 key factors: your payment history, your credit utilization, your length of credit history, your new credit inquiries, and your credit mix. Here's a fact. According to Experian, about 21% of Americans have a very poor credit score, which is below 579. Understanding where you stand is the first step towards improvement. And just to reiterate, if your credit score isn't currently good right now, it doesn't mean you can't turn it around. You could still have a positive credit score. And I'm going to list all the different ways you can do so. So don't be disheartened if you've come this far in the video and you're thinking of turning away. The importance of a good credit score. Why is having a good credit score so important? Well, a high credit score can open up a lot of financial doors. It can help you secure lower interest rates on loans and credit cards, making borrowing far cheaper. It can also make it easier to rent an apartment, get a job, and even lower your insurance premiums. According to a study by the Consumer Financial Protection Bureau, a poor credit score could cost you over £50,000 or dollars in interest payments over a lifetime compared to someone with excellent credit. That's a lot of money you could be saving to your financial future. From my perspective, it's not just about the saving. It's about the peace of mind knowing you have financial flexibility when you need it. I'd love to hear your thoughts on why you think having a good credit score is important in the comment section. Payment history is one of the biggest factors of credit score. The single most important factor in your credit score is your payment history, making up about 35% of your score. This means that paying your bills on time, every time, is crucial. Late payments, defaults, and collections can seriously damage your credit score. So remember that time you were in secondary school and you were gifted a brand new phone, but this phone was on contract and you were supposed to pay for the monthly contract bills, or in fact it started off with the person who was gifting you and then later on it transferred into your name, the contract transferred into your name. If you have missed even one payment, I strongly advise you to go back and have a look at your credit history score and your credit profile to ensure that this will not come back and bite you in the future. It doesn't matter what age you were previously, have a look and make sure that you're covered from all angles, because it can catch up with you in the future if you don't. Again, here at Wealth Hub IQ, we always provide practical tips. So my practical tip here is to set up automatic payments for all of your bills to ensure you never miss a due date. If you're struggling to make payments, contact your lender immediately to discuss your options. Many lenders offer hardship programs that can prevent a missed payment from hitting your credit score. Next up, let's talk about credit utilization ratio, which accounts for about 30% of your credit score. This ratio is calculated by dividing your total credit card balances by your total credit card limits. I repeat that again. This ratio is calculated by dividing your total credit card balances by your total credit card limits. Ideally, you want to keep this ratio below 30%. For example, if you have a credit card limit of £10,000, you should try to keep your balance below £3,000. This shows lenders that you're not over-relying on credit and can manage your finances responsibly. Again, another practical tip here is if you have high balances, focus on paying down your debt as quickly as possible. Additionally, you can request a credit limit increase from your card issuer. Just make sure you don't use the extra available credit to accumulate even more debt. Let's talk about the length of the credit history. The length of your credit history makes up about 15% of your credit score. This includes the age of your oldest credit account, the age of your newest credit account, and the average age of all of your accounts. Here's an interesting statistic. According to the FICO, people with an excellent credit score have an average credit history of around 11 years. This means that keeping your oldest credit card open can actually benefit your score. Again, a practical tip here is avoid closing old credit accounts, even if you don't use them frequently. If you do have to close an account, then consider closing a newer account instead of one of your older accounts. Let's move on to new credit inquiries, which accounts for about 10% of your credit score. Every time you apply for new credit, a hard inquiry is made on your credit report, which can temporarily lower your score. A single hard inquiry might only drop your score by a few points, but multiple inquiries in a short period can add up. According to FICO, individuals with 6 or more inquiries on their credit reports can be up to 8 times more likely to declare bankruptcy. A practical tip here is only apply for new credit when necessary. If you're shopping for a mortgage or a car loan, do your rate shopping within a short period to minimize the impact on your credit score. Finally, let's talk about credit mix, which makes up about 10% of your credit score. This refers to the variety of credit accounts you have, including credit cards, installment loans, mortgages, and many more. Having a diverse credit mix shows lenders that you can manage different types of credit responsibly. However, it's not necessary to go out and open new accounts just to that. Here's another practical tip. Focus on managing the accounts you already have. If you naturally acquire different types of credit over time, it will positively impact your credit score. So just to go into more detail here, when I say manage the accounts you already have, if you already have car loans, a mortgage, you already have various things out on credit already, continue to leave them out on credit. However, do not purposely go out and get a new credit card just to improve your credit score, but instead down the line you may realize that you actually need a credit card for something. So when it naturally occurs, then take it out. Let me share a personal experience with you. A few years ago, I made an effort to improve my credit score. This was a very conscious effort too, by focusing on paying my bills on time, reducing my credit card balances, and avoiding unnecessary credit inquiries. I was able to boost my score significantly in 1 year just by focusing on some of these very small details that I've highlighted here. And the main thing that I continue to say on Wealth Hub IQ is focus on the smaller things, and you'll see they will continue to lead to the larger things, and leaving your 9 to 5 to chase real financial security. I want to ask you a question personally. Yeah, you. What strategies have you used to improve your credit score? I'd love to hear your stories and tips in the comment sections below, and you never know who it could help. Remember, improving your credit score is a marathon, it's not a sprint. Consistent, responsible financial habits will pay off over time. And there you have it, the essentials of credit score mastery. By understanding how your credit score is calculated and following these tips, you can take control of your financial future. If you found this video helpful, make sure to give it a thumbs up, subscribe, and ring that notification bell for more tips on personal finance and investing. See you in the next video.